Welcome back to CryptoWealthy channel, guys. Happy New Year. I hope you are well. And in today's episode, we're going to discuss about some targets where the Bitcoin may actually pull back in the wave 4 of the Elliott theory that we discussed in this video. Just check it out. I think you're going to love this video. One of the reasons for that is because we do have some insane warning signals on the high time frames, and I think you want to see this. Now, this is nothing bearish. The markets are going in cycles, and the wave 4 is about to come. Just is question where. So in this video we're going to try to show you some of my technical analysis why I think on certain prices we may actually retrace into wave 4 pretty much to 40%, even to the 61 if the wave 4 takes some time. But I don't think that's too possible to go 50 or 60% in such a bull market, but we may see correction of 30 to 40%. So if you want to buy Bitcoin, I think this may be your opportunity. I wouldn't FOMO if I were you. I actually put all assets into the USDT so we can trade when we retrace long. Of course, I'm not going to trade short Bitcoin at all. So in today's video, I'm going to show you some interesting facts. So make sure to stick all the way until the end of this video because I'm going to try to be as short as possible. And now let's begin. So first thing first, we are on the daily chart, logarithmic chart, as you can see, and we already have some targets where Bitcoin may actually pull back. First, I'm going to show you how I got those targets, and the second, I'm going to show you how and why we actually may retrace towards $20,000, in the correction of wave 4. So after that, we're going to see much higher prices. And now let's see what we have over here. So as you can see, the coordinates first target over here is $30,230 approximately, and as you can see the next one is around $33,000 per one Bitcoin. So how Alessio measured those first goals that we had in this video over here is he measured the whole third wave and then he put it onto the bottom of the second wave, so we got those golden ratio on approximately around $23,000 or $21,000. Now what I did over here is those targets did not pull back Bitcoin in wave 4. We went over them towards $30,000 as you can see. The one thing got into my eye over here, if we take Fibonacci level over here, of course on logarithmic chart we can just pull from the $20,000 in 2017 all the way to the bottom, to the bottomest over here that we bottomed on $3,100. If you remember, just click it there, and the first thing that you're going to get over here is the 1.272% Fibonacci level, which pretty much set us on $33,000 approximately on the logarithmic chart, of course. And if we just exclude logarithmic chart over here, ladies and gentlemen, the next level that you're going to get is actually $30,000, the level that we actually marked. So for me, by me and my calculations, it's very simple. This is the zone that I'm going to watch when the Bitcoin may actually retrace. So $30,000 towards 33, that zone area. So this black area that you're seeing over here is the possible area for retracement. Of course, we may actually go over that zone. Of course, Bitcoin may be irrational still, but for now, this is the first zone that we are going to watch. So in order for retracement to be valid, as Alessio said, we need to have the bearish divergences and we need to have the breaking of level of support, which pretty much sets me for these levels over here. The level of support would be over here, which is approximately sitting on $24,200 per one Bitcoin. As you can see, Bitcoin had some resistance over here, even so there was nothing there, all-time high. Bitcoin did act as a resistance on that area, so this is the support that we are going to watch if we see the bearish divergences, which we are going to come very soon to that also, and we break this support over here. That's the clue that we are entering into the wave 4 correction, which could be long for 30, 40, even 50% to the downside. Let's assume that we are going to pull back now, and if we measure 30%, you can see that that's pretty much $20,000 towards $16,000 to $17,000. If you think that's not possible, well, it seems like you're not enough mature for the trading or for the investing. Of course, as I told you, we may see some irrational prices still before we see the pullback to the downside, but this correction towards $20,000 is possible, and I'm about to show you why. So right now we are on the weekly chart, and the thing that we are seeing just now is scary as I don't want to say what. If we exclude this line over here, and if we move a little bit, you can see over here one interesting development in 2017, ladies and gentlemen, $20,000 if you remember. The thing that I want you to look over here is the exponential moving average. Look what happened with the Bitcoin. If we zoom in a little bit, look what happened with the Bitcoin when Bitcoin went way too overextended, far away from 20 exponential moving average. We had one retest over here, then we had a bounce, pullback over here towards 20 exponential moving average, and then you had a bigger push than ever from 20 exponential moving average. After that, Bitcoin went way too parabolic over here, so it crashed so badly that we broke 20 exponential moving average and we went into the bear market. The reason why these pullbacks are scary, as you can see, if we measure every single one of them, they're pretty much about 30 to 40% pullbacks towards 20 exponential moving average. Now, if we come back into the present, ladies and gentlemen, we didn't retest 20 weekly exponential moving average for weeks. When I say weeks, I mean 2 to 3 months. So as you can see, we went way too parabolically from 20 exponential moving average. We cannot even see where the 20 exponential moving average is. Didn't retest it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, which pretty much set us on 3 months. Please just get ready for some sort of a pullback. This could happen, and yes, the pullback, as we did the technical analysis before this on Fibonacci levels, could be 30, 40, 50%. And why? As you can see, in 2017 we had a pullbacks of 40% and so please be careful. This is the weekly chart. This is the reason why these pullbacks are not looking so significant on the chart, but when you measure them, they're pretty much 40 to 30, 50%. Now the thing that looks scary, if we exclude logarithmic chart over here, look what's happening over here. Look how parabolic this move actually was in 2017. And if we come into the live version over here, well, as you can see, this is even scarier. So this is the reason why I want you to be very aware of the situation, what could potentially happen. I actually moved all my assets in USDT, so I'm going to expect some sort of a pullback. I don't care if it's here or above this zone. I'm just going to wait for the pullback, and then we're going to trade. As I promised on this channel, we're going to trade and do full analysis, why we entered the position, why we closed the position, why we've been stopped out, and so on, so you can learn about trading. Also, we are doing that. We have one trade on the link. If you are interested in that, check out the previous video. So the next thing that we need to see, as Alessio said, and as we went through actually over here on the charts, is the breaking of level of support, and also followed with the bearish divergences. Now the thing that is very interesting, the divergences needs to be on the lower and higher time frames, and I need to tell you, ladies and gentlemen, that I already can see some bearish divergences. As you can see over here on the RSI, even on the MACD, while the price is moving to the upside, this is pretty much bearish divergence on the 1 hourly chart. We can switch to the 4 hourly chart. You can see the same thing over here. It seems like that those conditions are getting met slowly. And if we switch to the daily chart is also on some sort of a way into the divergence on the RSI, while the MACD is following still the price, but the RSI is warning us. So we have multiple signals that we may see a correction. For now, we still don't see any breaking level of support, breakouts to the downside or so for now, but it seems like that the indicators and some history facts are pointing us towards that goal. So please be careful right now. We are in pretty overbought territory, and markets are not just mooning, they tend to correct themselves also. Now I think this is it for today, ladies and gentlemen. I hope this video wasn't too long. Make sure to hit that like and subscribe button if you like this sort of a content. Let me know your opinion in the comment section down below. What is your idea over here about pullbacks, or we're going to straight to the moon? I don't think anyone is so stupid to think something like that, but let's see in the comment section down below. I want to thank each last one of you for watching our videos. Until the next episode, happy trading and goodbye.